$100,000 is a lot of money. What's up, guys? It's Nick with Profit Day Trader here. In today's video, I'm going to go over why I do not trade with $100,000 anymore. Now, if you're new to this channel, we talk nothing but stocks, psychology of money, pretty much anything that can help you become a better trader in the stock market. So if that's something you're interested in, consider subscribing to this channel. If you are subscribed, we appreciate it so much. Thank you, thank you, thank you. Consider giving us a thumbs up. Really helps YouTube promote this to other people. So let's jump into it. Now, depending on which level you're watching this video, I know $100,000 to some people might seem like an insane amount of money. To other people, it might not seem like a lot of money at all. I'm at the point in my life where 100,000 is a lot of money. I understand that in the stock market world, it may not seem like a ton. So if you're watching this, you have some $1 million bank account. Sorry, not at your level yet, but hopefully I get there soon. And if you're at a point where you think $100,000 is unattainable, don't worry. I was just there just a few years ago. It's a lot of mindset. So I just want to share with you when I did reach that goal of being able to trade with $100,000, why I decided to step back and not do it. So quick little backstory. I do trade with a significant amount of money. So I don't want you to think I don't trade with any significant amount. So right now I'm trading with $40,000. I know it's a very weird number, but that's kind of over the trial and error over the past few years is what I've came up with to, that's my level of trading it right now. So before I get into the three reasons why I decided not to trade with $100,000, I just want to give you a quick backstory of I do trade with a significant amount of money. And just a quick warning, no matter what level of you're trading at, understand that the market is risky. It's very important to learn the fundamentals, and it's very important to learn risk management. So let's jump into it. Okay, so the first reason why I do not trade with $100,000 anymore, and probably the hardest for me to admit, is I'm simply just not good enough yet. And I know that sounds pessimistic, doesn't sound very confident, but I want you to understand something. Sometimes you have to learn yourself. It's okay to sit there and look at it and be like, you know what? I tried it. I wasn't. There's a lot of factors into it, and I want to explain to you in a minute why. So it's a lot harder to do than 40,000. You might think it might be the same, but trust me, it is completely different. So the reason why it's so much different is a lot of it is emotional. For some reason, when I'm in the $40,000 range, my emotions don't get too high. But when I start trading with $100,000, man, you see those numbers go quick. You see you're down 1,000, up 1,000. It's all over the place. So you start making bad decisions because it's just more of your net worth. So $100,000 is really just a lot for me to handle. So that was really the biggest reason why I couldn't do it anymore. Okay, so the number two reason why I don't trade with that much money anymore is actually fundamentals. Now, you might look at it as what's the difference between 40,000, 50,000, 100,000, $1 million? There's actually a huge difference in trading fundamentally. So there's a thing called, don't worry if I don't know any of these terms, but there's a thing called slippage. Now, the more money that you use, the more slippage you get in your trades. Now, slippage is you press the sell button or buy button at a certain price, and your order actually fills at different prices as it's filling your orders. So say I bought, let's just do a quick reference. So say I bought a $10 stock. I wanted to buy 1,000 shares of it. Well, if I hit buy at $10, I might fill 500 at $10 and 500 at $10.01. So that's called slippage. It's as I was buying it, I bought up all the orders at $10, and then I bought another 500 at $10.01 because there was no orders left at $10. But now let's say I bought a $10 stock. Let's say I bought 10,000 shares. Now, this is a huge difference because now all of a sudden your slippage just gets worse and worse and worse. So now all of a sudden I bought 1,000 shares at $10, 1,000 shares at $10.01, 5,000 shares at $10.02, 2,000 shares at $10.03, and etc. So the reason why it's such an issue is a lot of times in the stock market, those couple cents, that's your profit margin. So if you can get in and out with 1,000 shares at the exact price you want, it's very easy to scalp to make a couple bucks here and there, to scalp your way to a few $100 on a day. But when you're trading with $100,000, let's say, you start losing money when you buy and when you sell. So you actually start slipping on both ends. And a lot of times that cuts right into your profits. So fundamentally, it's a lot different to trade with a lot more money. So the third and the final reason is I have my money freed up for other investments, opportunities, and other stuff. So it's, again, day trading is very liquid. Your money is very loose. You don't really have tied in. So technically I could have more money in my trading account and it wouldn't really bother me. But because of the first two reasons, I like to have my money in my bank account, my savings account, because I'm always looking for real estate opportunities. I just started getting into the real estate investment game. It takes a lot of money. I like to have the confidence of having that money, significant money in the bank account in case I ever see an opportunity and I ever just want to jump on it really quick. So again, it's not so much that the money isn't liquid. Liquid just means the availability to get your money. But it's more so the fact that I like to have the confidence of having a big bank account in the sense of when a real estate opportunity comes up, I can just, I said, I just have the confidence the money's always there. So that's more so a psychological thing. I want to make sure that I'm having two different kind of incomes at the same time. So it's important to understand that you don't want to put all your eggs in one basket. The stock market's a little bit riskier. So I like to invest in more safer. Real estate's definitely on the safer side. It's very slow. There's a lot of issues with real estate as well. And I'm not going to get it. There's not going to be a real estate channel. But just understand that I wouldn't recommend just going all in on day trading. So if you start making some good money with the stocks, pull some out, do some different kinds of trade, different kind of investments. So that's just a little tip that I learned over the years, that it's not good to have all your eggs in one basket. So yeah, this is a quick video, guys. I really do appreciate it. If you stuck around this long, thank you guys so much. Again, this channel is really dedicated to helping you guys make as best choices as possible. I want you to learn from my experiences. I want to hear from your guys' experiences. If you guys have anything interesting to share, just comment down below. I definitely respond. I love hearing stories about people doing good, and hopefully you guys are making money in the market. So yeah, that's it for this one. Again, check back soon for videos. I post all the time. I said, if you're interested in stuff like this, consider subscribing. And yeah, I will see you guys in the next one.